Welcome, ladies and gentlemen, to yet another issue of the Grey Market Talk with my friend and advisor, Nic. Nic the Magnificent, Edge Portfolio Manager, Market Vigilante, and investor who used to run 60, 70 billion euros assets under management. I'm coming closer to it now.
Oh,
and of course, with me, Torsten Wegener, former market maker who loves to dive into the dungeons of macroeconomics and what's going on in the world. Nic, how are you? I had to do a Grey Market monologue last week and it felt weird. Are you all right again?
I am back to normal. Thanks very much. Your monologue was fantastic.
Lovely. So I had to dive into politics, obviously, as I love to do. And why don't we pick up where I left it last week and have a look a little bit into the absurdities that are facing us at the moment. Let me share my screen and let's get right into it. Share screen, Grey Market Talk, 25th of February, 2024. I'm promising you, Nic, in 2 months' time, somebody will start playing Christmas music in the supermarkets. Last year, the first time I heard it in August, I actually took a note in my calendar. It's unbelievable. Anyway, I'll start with my disclaimer again, because nowadays you need to do that. Article 5 Grundgesetz, German Constitution, freedom of speech. I've translated before. And just to make things sure, I have my press credential card with me. I'm not kidding here, I'm a journalist, registered for a couple of years now. So everything I'm doing here today is journalism, just to be on the safe side. Yeah. And then let's dive into it. What happened in Germany last week, Nic? A German entrepreneur who's apparently not a fan of the government had a search warrant was executed. They went into his private house because he had this poster outside or on his truck or somewhere, and he got a fine of 6,000 euros. And translated, it simply is, it's the front bench of our government, especially the Greens, and it says, we roll over everything. Pretty much, that would be the translation. And it depicts them not in a nice picture, but hey, you're Brit. Spitting images, you invented it. Yeah, you've seen it, I've seen it when we were younger. It was an awesome show, and they took the mick out of everybody. John Major, Maggie Thatcher, Ronald Reagan, Helmut Kohl, you name it. It was brutal in the past, wasn't it?
It was indeed. But the Brits had a sense of humour.
I'll leave it there. Do they still have one, Nic?
So,
do they still have a sense of humour, the British?
Yes, of course they do. I mean, if they would not dare do what just happened on this situation. But tell me, did this fine stand? I mean, did the guy not sort of refer to your previous slide and say, look, surely I'm allowed to say and do whatever I want?
In the German legal system, actually, the prosecutors can give you a fine, and if you accept it, that's it. Yeah. Then it's over. Obviously, you have the right to oppose against it in court. And I think he will go in front of the courts to say that is freedom of speech. I am apparently till now allowed to have an unfavorable opinion of the government. And well, Mrs. Faeser, our secretary, interior secretary, she came out in the press conference and elaborated on that in the Grey Market monologue. I didn't have the video then because I only saw it the week afterwards. She actually said on the air, it cannot be that people are taking, I'm freely translating, the mick out of the state and do not face a strong state. So it's all about delegitimizing the government. And I thought in a democracy, it's all about delegitimizing the rulers. Because if you can't criticize them anymore, take the mick out of them, well, then you're not longer in a democracy. What's freedom of speech all about if you're just allowed to agree with them? It's weird, really weird.
Absolutely. Absolutely. They can't criticize other governments for what's going on now. I mean, I think they are saying they're amongst them.
Yeah, let's hope there is a judge out there who will throw that out of court immediately and say, by the way, I want to speak the prosecutor in chambers later. You have clearly overstepped your boundaries here.
Sure.
Because this is not even derogatory or anything. It's just saying, yeah, these guys are ruining the economy. And we have plenty of evidence. We will show a couple of slides now what is going on. For example, Bayer, everybody knows Bayer. They invented aspirin, right?
Yeah.
Before
great company. Absolutely, truly great company. And they obviously sort of made one mistake in their history, and that mistake has cost them dearly.
That was Monsanto, right? When they bought the glyphosate producer.
Absolutely.
Which is interesting because glyphosate, yes, they've lost a couple of court cases in the United States, and that cost them, I don't know, 40, 45 billion in fees or anything, and it's not over yet. However, there are still contradictory evidence to glyphosate, like it was with what was it? Jackie Kennedy didn't like this stuff which was against mosquitoes. I've forgotten the name, DDT.
Right.
She read a book years ago that DDT is actually dangerous. And being the wife of the then ruling president, Mr. JF Kennedy, gave you some clout. And it came to a worldwide prohibition of DDT, which led to millions and millions of people dying of malaria because the one working product wasn't out there anymore. And then there are a couple of calculations. First one, the conspiracy one is, no, that was rubbish anyway. DDT was never dangerous. Even if DDT would have been dangerous, it would have killed a fraction of the millions of people who died of malaria, which didn't have to. So it's all these stories perpetrate through the news, and then you have the big blow up eventually. Coming back to Bayer. So obviously Bayer used to be one of the dividend yielding stocks. Everybody, for example, I wasn't invested in Bayer because I'm not investing in German stocks anymore. But if you have a dividend portfolio, that would have been the stock you would like to have in there. Stable returns, you can do some overwriting, you can do some underwriting. You're actually on the safe side, especially if what used to be a boring company with good products and stable cash flows doesn't move a lot. You get decent returns out of it. However, they now proposed, and I think the courts have to look over that as well, to cut down their dividend to the legally allowed minimum of 11 cents, which gave me two surprise effects. First of all, that's outrageous. Yeah? You cut down from 8% dividend yield to 0. Secondly, we have a minimum legislated dividend in Germany. I always thought, what, in a free market, you tell or you agree with your owners how much you're going to pay out. Otherwise, the voters kick your owners kick you out in a vote. But apparently, we have that in Germany. Huh? So. Putting my contrarian hat on, and obviously nothing of this is investment advice. We discussed about that in the green room before. That is blood on the street, what we are seeing here, Nick, is it?
Indeed. This is one of those situations where, the blood on the street is, in some cases, and this may well be one of them, is an opportunity.
I thought it was very interesting to see a company like Bayer. I haven't done any research about that, which I will do after our conversation. Obviously, it's very helpful to our conversation if I do the research afterwards. But I was wondering how much of their business actually is still rooted in Germany. It can't be a lot.
I looked into this thing. I honestly can't remember what that number is, but it's not, I don't think it's small.
Well, we'll have to look into it. Every investor out there who is interested in the psychological situation of being blood in the street, of actually having this situation now where they cut the dividend, before you do that as a corporation, you're really in a pickle. Yeah? It's the worst you could do in a case like this. However, if Germany goes down the tube and you have a company which is able to shift a lot of their production into other countries, not being Germany, that's what I mean. Maybe that's the time to have a look into building up some contrarian investments. I don't know what's going to happen, but with my trader heart, it's always the point, when do you want to buy this stuff? When you said to me earlier in the green room, when the S&P is at 5,100 or when Daimler just slashed their dividend to 0?
Yeah, absolutely right. I mean, there comes a point in time in your investment portfolio, it's like, buying the Hang Seng or Alibaba or Baidu or all of these things, right? You pick your point and you say, I think now's as good a time as any, but trying to chase the high of the S&P or, super micro computer at $1,000, good luck to you. It's different styles, but, long-term investments, I think this, you're at the point in Bayer where I think this is
absolutely
interesting,
Okay.
And the Chinese became interesting a few weeks ago, and it's been proven right. So,
hey, I don't know. Did I say that actually on the air? Or was it with my students? We looked at the FXI because our anomaly monitor. I showed it last week in my monologue. Actually,
I saw it.
And obviously, it's always a bit of luck when you get in there. However, when the statistics show you something where you think, yeah, fine. when is ever a point when you want to buy something? If you would have written the short puts, you've already up 70-80% just on the short puts. If you would say, fine, if I get assigned eventually, I still want to hold this because I think the Chinese economy is not going down to zero. It's not going to happen. When you won't buy, when they're cheap or when they're expensive. Anyway, other point I had in, we all know the steel motor chainsaw because it became popular when Leatherface used it in the Texas Chainsaw Massacre. And Mr. Steel, one of the original was one of the big playboys in Germany who dated Brigitte Bardot and others. So obviously the company moved on. And I saw an interview in the Deutsche Tagesschau, state television. Yeah, just putting here my press credentials into the thingamay again this morning, and they had the CEO, I've forgotten his name, unfortunately, of Steel said they have 6,000 employees in Germany, and they're seriously considering moving production facilities over to Switzerland because Switzerland is one of these low-cost production countries. Obviously, bullshit. Switzerland is one of the most expensive countries to produce anything in the world. However, with taxes, energy costs, and regulation, it would become cheaper for steel to produce in Switzerland than in Germany. And he gave an example, and he said, we have 6,000 employees, I'm repeating myself, 5,000 of those who are actively involved in production, a good people need all over the world, have additional jobs just to cope with the bureaucracy and the regulation. So apart from their daytime job they're getting paid for, they have to produce numbers for authorities, figures for authorities, make sure that they, I don't know, are not endangering any mice in the production facilities, you name it. 5,000. I was surprised about this. If a corporation employs people to create things, and then these same people say, listen, we can only keep on creating stuff if you take some additional job and provide figures to this ministry or... But it's madness. It's absolute. I couldn't believe that. 5,000 have additional jobs. So yes, kudos Switzerland. Thank God for having the last real democracy around the corner, which is now even getting competitive producing, well, hardware, chainsaws. It's
good for them.
Yep,
yeah, absolutely good for them and bad for Germany. And this is the kind of thing. Obviously, this guy is very well connected, and I'm sure he's already sent the message to the government, but the government either don't want to do something about it or they can't do something about it. And that's an interesting thing.
Well, it's almost old Marx was right, because what he said is that capitalism inevitably, and I don't think he means real capitalism, crony capitalism, will inevitably lead to concentration of large businesses. They build up a moat. If you're a new entrepreneur, you come up with the best chainsaw in the world, beating the crap out of what steel might produce. How on earth would you set up production facilities in Germany and try to compete in a free market or in an alleged free market with a new product if you have all these regulations? There's a new thing coming in at the moment they're heckling still about, the Lieferkettenfördergesetz. How would I translate that into English best? It's as a German producer, it's a European regulation, so obviously the whole of Europe, you will have to sooner or later show evidence whether any of the products that go into your production products are fulfilling the regulations of the European Union. For example, no child labor and working conditions, and you can't use any fertilizers that are not allowed in the European Union. So another interview this week on television by a German entrepreneur, and she said she's selling, I don't know what she's actually doing. She said, we are selling 2,000 products that are my product portfolio. It's impossible for me. I can't follow these rules. If somebody says I would have to bring in evidence what all these products which I'm buying worldwide and assembling them to other products, I'm out of business. I can stop immediately. So we don't know.
I never thought I'd hear you say it, but I'm very glad that the Brits are no longer in Europe.
There is a point to it. I hope you guys, you're great in bungling things up.
Okay, we screw up in other areas. Of that I have no doubt. But the sheer bureaucracy in Europe is causing so much damage into an industrial country like Germany. It's outrageous. It's a shame.
Oh, and then let's come to the absurdity of the week, which also went through the official press. I put the Tagesschau in here just so that nobody can complain that we are biased or anything in here. A German citizen actually used the power of the legal system to father 22 children from countries outside of Germany. There seems to be a legal loophole, even though it's allegedly they are not his own children, so he's not the genetical father. If you accept fatherhood, then foreign citizens can come in to Germany, including large chunks of their family, and you're also able to get or profit from the benefits that are being provided. And in the country where he seems to have some relations to, Nigeria, even though he's a German citizen, he's being called, what says the Deutsche, the ARD, the cash king. So we have a very interesting situation going on in Germany, where a business model is, if you are officially accepting fatherhood of children who are by any means not your own children, you enable immigration into the country and immigration into the social provisions we provide for everybody coming in.
Well, obviously, Germany is a rich country. I mean, it's got money coming out of its ears, no budget deficit whatsoever. Good luck if you can afford it.
The bad thing about this, I heard, was actually that is something known to the authorities for the last 10 years.
No.
So you can't, you can't blame it on the current government.
No.
It was already the governments before who knew what was going on and didn't come up with any laws how to stop that. However, they came up with laws that you are now being a criminal by misgendering somebody. So they seem to have had time for that. By the way, another great statistics. Guess how many universities have still official, we call it chairs or Lehrstühle for atomic physics in Germany?
Tell me.
4. Guess how many of these official places at universities with professors we have for gender studies? 284.
No. No.
Yep.
It's awful.
Yep.
It's awful. It's a slippery slope. The more I hear of this stuff, I must say, slippery slope.
Well, I think it's sorry, we keep laughing about this stuff, but it's deadly serious. If you look at it, and especially if they go now after people who are criticizing the state for its decisions, even if the decisions are evident and being shown on the public media channels like Tagesschau or Bild-Zeitung. Yeah, let's have a go at it and see whether somebody will wake up and not give them their vote the next time anymore. Anyway, let's come to the business. Obviously, we start with Germany again, but that has wider implications. But I want to pick your brain. Short sellers are betting massively against a German bank, and it's a rather small German bank, market capitalization of 500 million. However, this German bank is very active in the real estate sector, especially in not private real estate, but commercial real estate. It's the Pfandbriefbank, and they're one of the big issuers actually in Germany for so-called covered bonds. Nick, what is a covered bond?
Well, it's a bond which is backed by mortgages, if you like, properties. So they lend money on properties, and that creates a collateral for them so they can actually issue another bond, borrowing money. And this collateral pool is the kind of the safety net. And the great thing about the Pfandbrief, if you like, is that historically the Pfandbrief has never defaulted. So this is one of those instruments that's been around for about 200 odd years. That has managed to survive all sorts of credit implosions and this, that, and the other. And the Pfandbrief has never defaulted. But so that's issuing these Pfandbrief is just a way of them borrowing money in order to sort of provide the liquidity, if you like, for their business model, which is effectively to lend money on real estate and earning their margins. So they get depositors, they borrow money cheaply, and then they go and lend the money, with risk in other real estate assets. And I think this article goes on to talk about the fact that they have exposure to US real estate. And, US is not the only market going through a commercial real estate, problem. And obviously it's hit confidence in in Deutsche Pfandbriefbank, and it's hit confidence in a lot of other institutions who are, more exposed, if you like, to the real estate sector.
So these covered bond nicks, as an ex-Bear Stearns employee, they are not loaded up now with crap instead of, or like we've seen with the CDOs at the time, yeah, where you have a really portfolio of bad credit ratings piled all together, and then the magic of portfolio diversification will tell you there's actually no risk in it. These covered bonds, these Pfandbriefe, they are good quality in there, yeah?
Yeah,
Or are
absolutely.
they now being I don't know, filled up with crap as well?
Yeah, I don't think the issue is the concerns, if you like, on their collateral instruments. Although clearly when there's nervousness in the market, these things are going to get sold off. I think the concern is overall in the business model of Deutsche Pfandbriefbank and whether or not this institution can continue to do what it's been doing.
Because I heard somewhere that the spreads of the Pfandbriefe widened by 40 to 80 basis points, which is unheard of, never happened before.
Absolutely. I mean, as I say, this when people are nervous and they don't want to take the name and there's something going on, clearly. But there is a good track record in this Pfandbrief stuff. They're usually so over collateralized that generally they are money good. But money good doesn't mean that you want to pay and earn next to nothing as a yield. When you have something where there's risk, people then reprice that risk and say, okay, before I was earning, let's just say, a spread of 100, now I want a spread of 200 in order to buy this stuff. If there was really a problem, then you would not see sort of spreads widening by 80 basis points. You'll see these things dropping. They'll be 20% down, if that really were the case. But the point on all of this stuff is that, this is a German entity. It lends on commercial real estate. Commercial real estate is going through already for a year now in the States, and not just in the States, but around the world. It's going through, it's been well overinvested, put it this way. And there's been so much, it doesn't matter. It's real estate. Let's buy it. Doesn't matter. And suddenly what's happened is that you take the yield, if you like, on these properties, and the yield goes down. So the rent versus what you paid for it. And the yield is so low. And then suddenly there's an inflation thing in the background. And that inflation thing in the background means that interest rates are starting to go up. So where you were earning, let's just say 2% on a property, with interest rates at 4%, you've got to ask yourself, well, is that does that justify the value of that property? And clearly not. So the property value readjusts, and when it readjusts, then the collateral is worth a lot less. And if the collateral is worth a lot less, these companies need to put in more equity in order to continue to borrow money, and you have to find that money from somewhere. Eventually, you don't find the money, then you go and sell the property. And something you bought for 100, you're selling it for 60. Something you bought at 60, then you're selling it at 30. And that's what's going on. Is there's been a general repricing a lot of these overpriced real estate around the world. And commercial real estate, office, we've had COVID, occupancy in real estate is very low, and it's staying low. And that just means that really the values that you were paying 5 years ago on this stuff is probably too much.
I've just put a chart on. It's the increase of the real estate values over the last 10 years. And it's actually, it's very interesting. From 1975 to 2022, real home prices in changes, which is obviously, I live in Germany, so apparently me buying a house sucked the big one. But everybody else, like you in the United Kingdom, or our friends in Canada, Australia, New Zealand, or the United States, made good profits on their market. When I'm looking at this German bank right now, I've used that analogy before. It's almost like dynamite fishing, right? You light a stick of dynamite, you throw it in a pond, and you see a lot of little fishes bubbling up eventually. And you wait a little bit longer, and then the big whale eventually comes up because it dies underwater and slowly bubbles to the surface. Is that what we are seeing at the moment? Is there bigger stress in the financial markets induced by real estate than we are seeing? And to tack on another question, is that the reason why the Fed is still talking about, yeah, we would love to lower interest rates, Nic?
I'm less concerned about real estate. This is a part of the real estate sector that is obviously under an awful lot of stress. Yeah, and I just think this is, a bit like buying crypto 2 years ago, where paying 60,000 for Bitcoin was too much, and it has to reprice. And the world was still good after that. And I think commercial real estate is going through that kind of repricing right now. But the residential real estate market is not getting particularly hit, or not noticeably hit. But people who have exposed themselves to commercial real estate, which is, when you're buying real estate to live in, it's an emotional thing. It's not, you're not talking about getting the returns. You're not worried about whether your house price goes up by 10% or 20%. Whereas when you're buying commercial real estate, there's a return on this thing that you expect. You pay 100 million for a building or a series of buildings, and you get rent of, let's just say, only 2 million. That's a return of 2%. And that return has to fund how much money you've borrowed over the time whilst you're holding this asset. And then suddenly, if yield on money market funds are at 5%, and suddenly equities are going up, really strongly, and there are other instruments to invest in, suddenly you think, well, hang on, maybe that 100 million that I paid for this property is probably a bit too much. Maybe I should be getting out of this stuff and go into something which is going up. And my bankers are no longer going to be financing me at 1% as they used to in the past. And now they're phoning me up saying, oh, your collateral has gone down from 100 million to 50 million. We want more money from you because your 50 million loan, let's just say they borrowed 50 million from the bank, they put 50 million themselves on 100 million property. Their 100 million property drops down 50% or 40% or whatever it is. Bankers say, we need more collateral. And I think that's what's going on. And this is a subsector of a wider investment universe that is particularly getting hosed. And this real estate values thing, I think this is, it says real home prices. Home prices have been fine. Canada and Australia on the right-hand side, I think probably will get some retracement. But I think generally home prices, should be okay. Commercial real estate, big problem.
You mentioned alternative investments here. Yeah? Where do I put my money best to work? And I came across these Sharpe ratios here today by asset classes. So what is a Sharpe ratio? Simply shows you the return put in relation to the volatility of the underlying. Yeah? So the higher your Sharpe ratio, the more return, the more bang for your buck become while the risk is given. I thought it was actually quite interesting. If you looked at the Magnificent Seven, right on the left, have the biggest Sharpe ratio. It's usually, I've already mentioned the name volatility in this term for the Sharpe ratio, which is used in the financial industry as, well, the big daddy number, right? There are a couple of ratios, but every investor asks you about your Sharpe ratio you have in there. So we have reasonably little volatility in the Magnificent Seven and outrageous returns, or even more outrageous returns while given a set amount of realized volatility we can see in this Bitcoin, Ethereum, and the US dollar. Nic, does that look to you, with all your experience, like a normal distribution of risk assets you could buy?
Well, firstly, I think this data says as of year to date. Okay, yep. So this is 2 months worth of data, what's going on around the world today. Kind of fits what we're seeing. Stocks are up, bonds are going nowhere. You're seeing a retracement in bonds as the expectation of rate cuts has gone from a stupid 7 this year to, a more realistic 3 or 4, whatever that number may be. The Fed said a year ago they're going to do 3. They need a reason for it to be more than 3. And when you look at the inflation numbers that we're seeing, you're not seeing any sort of disasters in unemployment. You're not seeing big improvements in inflation. So they need to have a reason to say, okay, it's got to be more than 3 rate cuts. In their mind, that's their way of thinking, forget money supply and all of this stuff. their way of thinking. They haven't got a reason to cut. And for that reason, all of these bond type instruments, so treasuries, investment grade, high yield investment grade corporates, EM bonds, all of these bond-like instruments, they're just getting retraced like the underlying is getting retraced right now, year to date. Does that mean that's going to be the case to the end of the year? And are we going to see the same balance of things going up and some things going down? This 2 month window analysis is useful, but it's not necessarily a guide to for the rest of the year. But what do we think anyway? Longer term, we think stocks will continue to outperform fixed income. Why is that? Because we don't expect yields on bonds to go back to the 1% level in America from where they are now at 4 and a bit percent. Why is that? Because the government will continue to issue paper. They're borrowing, and therefore they need to, people who are buying this stuff need a higher yield. So the bond market's not going to get a massive rally. Bond market's going to have a range of, I don't know, between 3% and maybe back to 5.5% over a long period of time. Stocks is a reasonable bet, not up here. I wouldn't be buying anything up here. International stocks, they look very interesting. Bitcoin is good for me, and gold longer term as well. So those are things I'd look for, and these are just short term kind of. So I'd call it noise right now.
Yeah, I'm with you on that. I was thinking actually, you mentioned longest term duration assets, yeah? And usually the high techs who are not showing any revenues are the longest term assets. However, the Magnificent Seven are now down to the Magnificent Four.
Absolutely.
They produce bloody revenues. They are there. They're in your face. Yeah. If Nvidia comes out and says, "Oh yeah, by the way, we made last quarter more than we did the year before," that is actually, even if you're highly valued, I think they are now valuated at 34 times sales, not profits. 34 times sales they're doing. Yeah. The reckoning will come without any doubt. It's just a question from which level.
Sure. But I mean, this isn't, there's a lot of an AI bet right now. One thing we said in previous videos, what is the AI bet? The AI bet actually is something which is good for all stocks, because ultimately this should be, reducing the cost base of a number of companies. If AI works, and I'm looking at this Handelsblatt article, that maybe it's not working. I don't know.
I just slipped forward. It was the big story last week. Obviously, you were out for the count, so you didn't follow that news. It was hilarious. Google came up with their large language model, Gemini, which is producing pictures. And people said, prompted or put the prompt in, show me a picture of a pope. And then a female Asian pope and a black pope popped up. So they started Googling for more. Show me Vikings. Yeah? And then Asian and black Vikings popped up, and the more they started searching, they went for some, okay, where would I definitely find white people in? And they said, show me Nazis from 1942 or 1943. Yeah? Not black Nazis, but Nazis. And AI came up with pictures like this. So people started questioning the whole thing and said, okay, show me any picture of a bunch of white people. And Google Gemini came back and said, I can't do that. That would be racist and non-inclusive. So Google had a bit of a shitstorm on the internet there, and it came out that when you prompted your question, the AI of Google actually put the search terms, diverse and you name it, in there as well, and then it generated the pictures out of that. So me being the conspiracy theorist I am, I almost think there was a very clever Google marketing guy out there who said, you know what? Let's create this shitstorm. Nobody talks about Google Gemini. Everybody's talking about ChatGPT. How do we get in the papers? Because the official excuse then was, oh yeah, we made a mistake, made a boo-boo. We're obviously changing that, but everybody knows now what Google Gemini is, right?
Yeah, if it's a marketing gag, I'm not sure that it's a clever one, to be honest with you. This looks awful.
I'm telling you, that's why I used the Handelsblatt again, not my usual sources.
No, it's an awful sort of marketing thing for Google, if you ask me. I mean, they can't really cock it up that much. And effectively, they're saying, to everybody, hey, you know what? We can steer the AI the way that we want to steer the AI. And if anything, this just begs for regulation,
It
right?
just you mentioned the business case for AI, and in my head it's this: yes, AI I think has the most magnificent business case ever, like the internet had the time, because it makes life easier, it increases production. However, if AI is not intelligent but
Sure.
stupid, is there still a business case? And if the
Yeah, well, that's
regulators are coming in and telling you, oh no, we tell you how to use it, you end up with an AI which is just rubbish.
well, as I say, this thing now begs for regulation. And what do the regulators do? They go and impose their own kind of rules as to what they want the world to see. It really was not very clever from Google. If they meant to do it, then, I'd say that was a bad call.
I'm telling you. So let's go to two more slides I just skipped right now. We were talking about the US market, and this chart is actually quite nice. It shows US equity risk premium at a 23-year low. It's simply the S&P 500 earnings yield, and then you subtract the 3-month T-bill cash we have in here. And June 24 looks like, well, to me, like a turning point. Where would you want to employ your capital in a risky market? Again, you make money when you buy something cheap, not when you buy it expensive. Are we there yet, Nick? Is the market sooner, or rather sooner than later, let's phrase it that way, getting into a new narrative of readjustment? Will that be the trigger point for a correction, at least a temporary correction?
So it may well have been 6 months ago, 9 months ago, we had a similar conversation. And I said, if you look at the Cape Shiller equity risk premium, it basically suggests that the eventual returns, the excess returns that you're going to earn by buying stocks versus buying fixed income, is very, very small. And some people would even have that as a negative. And I said, well, that's a 10-year outlook. But what if, and this was the scenario I gave on the air, was what if you do earn, let's just say 0 over the next 10 years, but in the next 3 years, you earn about 30, 40, 50%. And effectively thereafter, you have minus 50% on your portfolio. So what's happening is that you're front loading all of the returns in the equity markets now. And this was the sort of the kind of the idea that I suggested when we talked about this first time, that, you want to be long of equities. The market is going, this was when everyone was talking end of the world as we know it. You want to be long of equities. You may well see, until at that stage, I was saying 2025, you may well see that equities just continue to rally. And thereafter, everything goes to, hell. And for me, that's quite possibly the outlook that I've got in the equity markets, where we're very, very close to the kind of the top end. You're still expecting 6,000 after a sell-off. Let's just say we get that sell-off, goes back up to 6,000 thereafter. I think for the next years, it's going to be tricky. Because as you say, you've eaten up all the returns. Look at that. Look at that spread.
I've just pulled up the Shiller PE ratio. It's actually a very good website. You find it here in the top, multiple.com Shiller PE. You obviously find all these numbers also on TradingView. But what we've seen in 29, we've seen a Shiller ratio of, where are we here? Of just above 30, 31.48, right? And then we had, slim pickings for a couple of years. And what I find quite interesting, which I think might be comparable to today, in 2000, we had a Shiller PE ratio of 43. So there's another 10 points left, if you would take that as a reference, or even more. Because what was interesting, we had a complete new technology popping up in 2000, the internet.
Sure.
So that changed things a lot. Having said that, at this time period, we had also new technologies. We had the radio coming out. Suddenly people could have information all over the place. We had the assembly lines coming in. So at this point in time, yes, we have a high valuation according to the Shiller PE ratio, but the narrative is still going strong. At least the numbers we see from NVIDIA are not disappointing at the moment.
Absolutely. Those excess returns that you had on the previous slide, they're not a signal. They are just a state of the affairs of the market right now. And at some point it will turn, right? But I do believe that we are pulling forward for investors the next 10 years worth of earnings, so much forward that, 2024, 2025 may be the last blast for these types of investments. Doesn't mean that equities globally are awful. You might have to look at Europe, you might have to look at Asia. You might have to look elsewhere than where you've been looking. Small caps, they've been beaten up. Things like this.
Well, this week also a big day after the peak Nikkei in the 80s. We reached new all-time highs. It only took us, 43 years to eventually recover the money?
If I'm not mistaken, I saw an article during the week saying analysts turned bullish on Nikkei, and I had my head in my hands thinking, great analysts is all I can say. Great analysts.
Well, they've heard the old adage: if you have a new all-time high, you have to buy. The reason will be delivered later,
well
right?
Done. Good effort. Thank you.
Well, fine. Oh yeah. Final slide. Obviously, in our modest means, I had a little video out which went some sort viral, but I had to share it. It's in German, obviously. It's one of these, I call it chart porn. Yeah, S&P 500 now versus 1929, and the guys who published this chart knew exactly what they were doing to get clicks. So I thought, fine, I'll tag on. Correlation of 94%. What they did here is simply looked at the prices we've seen today versus the prices we've seen in 1929, did the correlation computation till we are at this point here, and then they said, well, you judge what could happen next. And what we've all seen, there was in October, November 29, then the market retraced 50%. However, I went into the numbers and said, first of all, you played with the scales. What you can see here, 29, the red line, market was up 63% over that period, not 30 as we've seen. And then they did the mistake, everybody who was new to this game, or they didn't do the mistake, they did it deliberately. Let's put it that way. They simply took the price data and did the correlation out of it. So, but that's not how the game works. We look at returns and compute the correlation. And instead of 94%, you come out with a correlation over this period of 7%. So people like that chart. I just thought I slip it in here. I've earned it. So there we go. Then let's finish on a lighter note. This was not generated by Gemini. That's something which is floating along the internet for quite a while. Generate a picture of Elon Musk. So that's how the future could look like if AI takes over. I think it's a brilliant picture. It's a very good looking chap here, by the way. And if you go a little bit further, also not by Gemini AI generated, the next product we can expect from Tesla is the new Cyberbus. If you are as old as Nic and I am, you are fans of the original Star Wars. That is, what were the little dudes called who were driving around with that?
Will come to me.
You know what we're talking, little brown coats and running around scavengers out there. So yeah, I thought let's put that in, as we have now reduced the Magnificent 7 to the Magnificent 4. I don't know what's going to happen next. Nobody does. The only thing I know is, hopefully, if somebody of our overlords sees this, I try to do it journalistic. It's not the best journalism in the world I'm doing here. Yeah, but at least I went to original sources from the big names, from the public broadcasters we have here and the public tabloids, and we looked into the mess that Germany is. We're trying to elaborate, is the financial world in crisis? Is it the little fish coming up to bubble? I don't know. Could be possible. It's usually how it starts, that the little ones on the edges are getting in a default. And we discussed, is the future of AI actually beautiful for all of us, or are we making a big mess out of it? Nic, can I have your final words to these thoughts?
Let's hope they don't make a mess out of it.
In that sense, I hope you enjoyed our little short, brief video today. We still managed to do over half an hour, I guess. Well, we see you later. And hopefully we can all enjoy your company again next week, when I'm sure the market will provide us with all sorts of very interesting topics. Wish you all a very successful week of exciting numbers. I don't even know what's coming out. I should look more into the market, actually. It's the cold is getting all of us, isn't it, Nic?
Yeah, it is. It is. But instead of flu, now we just get COVID.
Excellent.
Or something like that.
Excellent. So in that sense, have all a beautiful and very successful week. See you next week. Bye-bye.
See you. Bye-bye.